While the debt crisis rages on through the Eurozone, nervous investors flee to relative safe havens. But where does France stand amid the financial crisis? Well, here with me now to discuss just that is Tim Ohlenburg, a senior economist at CEBR. Tim, the US downgrade has made the markets wary of other weaker AAA-rated countries. In light of France's own debt problems, how long is it till their credit rating is at risk?
I think that France is in a much better position than a lot of other countries, and the market reaction is somewhat unjustified in this case, I think.
But obviously another potential concern is the European Financial Stability Facility, of which France, as we know, is the second biggest contributor. Another bailout package for, say, Spain or Italy would undoubtedly put a strain on the French economy. Can it really cope with the possibility of a larger bailout fund?
I think Europe generally has the capacity to see this situation through financially. The situation in France is really not much different from the one in Germany, and the market reaction is not very rational in this case, because the spread of French yields over German ones is rising, and at the end of the day, if France also had to be bailed out, then Germany would have to shoulder most of the bill, and that doesn't make sense.
As we well know, countries need strong economic growth to tame their debt load, but the central bank are only forecasting growth of around 0.2% in the third quarter of this year. How will this affect the economic recovery elsewhere in the Eurozone?
We generally see growth slowing globally as public austerity reduces the growth in the West, in both the US and the Eurozone, and also high consumer debt levels are being reduced, so we're seeing weak consumer spending there. And at the same time, emerging markets are coping with very high inflation that's forcing them to raise interest rates and decelerate their economies. So generally, growth is slowing overall, but France has been doing fairly well, and we expect it to do better than at least Italy and probably Spain as well.
There's mixed views that it may be too late to prevent some of the countries from being forced out of the Eurozone. What's your outlook on the future of the Eurozone and, of course, the Euro?
Well, we think that the Euro generally is stable and will continue. It may be in some countries' interests to actually leave the Eurozone, especially Greece is a main candidate here, and maybe Portugal, that may not be able to regain their competitiveness unless they revalue their currency by a big amount. Otherwise, long years of very difficult restructuring are waiting for them, and we think that politically they may make the decision to leave.
Thank you very much, Tim. There'll be more interesting topics discussed throughout the week, as well as targets in focus to keep you updated, so stay tuned.